I've been in the financial markets since I was basically a kid, didn't know anything. 1975 when gold was legalized. And so I sort of learned from the ground up. I was with E.F. Hutton then. And I've never seen, I'm speaking as a technician and also on a broad fundamental basis, I've never seen such gigantic asset categories that are moving in such a way that they will impact either negatively or positively another asset category. And you can't just look at gold and silver and say, well, I'm going to analyze it. No, you can't. You're making a great mistake.
With almost 50 years of experience in the financial markets, momentum analyst Michael Oliver has certainly seen it all. Michael started his decades-long experience in the financial markets on the futures side at E.F. Hutton's International Commodity Division, where he studied under David Johnston, head of Hutton's Commodity Division and former Comex chairman. Michael started developing his own momentum-based method of technical analysis in the 80s after discovering that orthodox price chart technical analysis left many unanswered questions and made investors place too much importance on chart breakouts and support and resistance levels. After his approach helped him anticipate the crash in 1987, Michael decided to develop his structural momentum tools into a full analytic methodology. It's been over 30 years since Michael Oliver switched to full-time technical research, and according to him, the charts are showing something they've never shown in his almost 5 decades of experience, trading and analyzing the financial markets. During a recent interview with J. Taylor Media, Michael examines the often inverted correlation between the gold and silver charts and the rest of the financial markets and the United States economy. According to the momentum analyst, gold and silver investors are completely focused on the precious metals price charts and are ignoring the rest of the markets. Michael believes this is a grave mistake, as the stock market is an especially pivotal point that would significantly impact gold and silver prices. How should you approach the markets in 2023? What can you expect from gold and silver in 2023 and beyond? What happens when the biggest stock market bubble in U.S. history goes up in flames? Please watch the video to the end for some insightful tips and golden investment advice from one of the industry's most respected personalities. Also, ensure you like this video, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and helps us grow the channel. Thanks, and enjoy the video.
2021, the markets had risen sevenfold in the S&P from the 2009 low. NASDAQ 100 rose 16-fold. There is no bull market in U.S. paper asset history that is comparable to that. The great disasters of the 29 to 1932 downside, the dot-com collapse, you name any bull market peak and the collapse that followed, none of the bull markets had sevenfold or 16-fold increases before they collapsed. They had doubles, triples, maybe. Why did it do that? Well, I mean, you can debate all you want to about all the great things that were invented or whatever, but look at an M2 chart and you'll see it went off the page. The money went somewhere. Investors chose to put it into the stock market. And when they first put it in 2009, that made sense. The stock market was in the 600s on the S&P. It had down from a 1570 high. Okay, it was cheap, so it made sense. Take that river flow of capital that the central bank gave you and direct it into the stock market. Sure. They kept doing it for a dozen years. Okay, not only the stock market, but muni bonds, high yield corporate debt, real estate, etc. All those asset categories went up basically parabolic for a long period of time. It was a bubble. The bubble is now broken from our vantage point in early 2022, over a year ago. A few months after the peak in the S&P and the NASDAQ, we put out massive sell signals arguing, it's over, we're going into a major bear market. The first phase will be an arm wrestling match. And sure enough, it's been that. In other words, where you can't decide whether it's up or down. In fact, it's down, of course, we're well off the highs, despite the rally. The problem is that to unwind a bubble of that size means there'll be real world consequences, in your face consequences that doesn't affect just people in the 1%, but everybody, painfully. A lot of people made decisions over a long-term period of time about their personal financial outlays, corporate outlays, city-state spending, federal government spending, all based on certain assumptions, including money is cheap.
Right.
And it stayed cheap, and it stayed cheap. So it became habitual. So a lot of mistakes were made, and they're embedded in the economy. And once the bubble breaks, it's like ripping off scabs. Okay. You reveal what's underneath, and it's only begun. Okay. Now, what does that have to do with gold and silver? Why is it that of all the asset categories on the planet, that stocks, the S&P was down over 20%, NASDAQ down over 30% from 2021 close to the 2022 close. T-bonds down over 30%, muni bonds down enormously, real estate down enormously. What was up? What was steady? Gold was unchanged for the year, 2021 close to 2022 close. That was in the mid 1820s, by the way, was the price. Yeah, it had been either side of that level, but that's where it was. Silver actually gained 1% or 2%. Yes, it was a volatile market with a downward sort of bias, but actually at the end of 2022, it closed higher than it did in 2021. What's going on here? Why was somebody, S after that, parentheses S, somebody's buying gold and silver and selling everything else? What was on their mind? After all, the Fed said they're going to beat inflation, right? Well, what are the monetary metals? They're inflation metrics, right? So if they're going to beat inflation, then why wouldn't gold and silver collapsing? Because they knew, somebody knew, we argue, the bubble's broken, and as it unfolds in shards and makes noise, the central banks will have to, out of necessity, do what they were invented to do, and that is print money, print money, print money, get money cheap, and support government debt market.
Michael believes the U.S. Federal Reserve is about to enter full panic mode and turn on the printers again. Since early last year, Fed Chair Jerome Powell has continuously expressed the importance of bringing down inflation, regardless of the cost to the economy and Americans. During his infamous Jackson Hole speech, Powell repeatedly invoked Paul Volcker's name and asked Americans to prepare for pain until inflation drops to the central bank's 2% target. Several rate hikes later, and inflation, even the doctored official figures, is still above 2%, and the economy is beginning to bulk under all the pressure. Let's get back to the interview as he speaks further about the impending stock market collapse and what it means for gold and silver.
And already Powell said in his last little speech, it was properly interpreted, I think, by analysts. We can pause, I think, because the banks themselves, he said, are actually tightening credit. They're sort of doing our job. So in effect, he said, the Fed's going to back off here because the banks are doing, and I think he was also scared by the banking event, which I do not think he anticipated at all. So we have a bubble that's only begun to burst. I think Powell is beginning to maybe realize that. And when the blood gets thicker, the policy will shift more overtly. And a lot of people think, oh boy, that means the stock market will go up. Well, go back in history and look at Fed fund rate increases and decreases and overlay them on the S&P, and you'll see, when the bear market starts in the stock market after a period of rising rates and starts to crumble, even when the Fed starts to cut rates, it will not stop that bear market. They started cutting rates in late 2007, around the time the S&P was peaking. They continued to cut rates and the S&P collapsed. It didn't matter. Why? Because the bubble was breaking. This time we have a bigger bubble in history. So the consequences will be major, and therefore it's gold and silver people need to be watching the stock market. So right now, our focus at MSA, and we look at all four major asset categories, the debt market, foreign exchange, stock markets, and commodities with a focus on gold and silver. But you just can't look at any one of those in isolation. You're making a mistake because there's a lot of information in the side mirrors. Don't just look out the windshield of gold and silver. So right now, our prime focus is not so much on gold and silver, because gold and silver, as far as we're concerned, have made their statement. Not only did they go down and wash everybody out by having a false price chart breakout last September, when gold blew through a price chart floor that an idiot could draw, 1675, 1675, 1675 for a period between late 2020, 2021, and early 2022. Repeatedly used that level as a floor. It broke it. People ran screaming from the room. Silver also broke below prior lows, went down to the low 17s. It's all over. Gold's going to 1400, going to 12. It depends on what they were only debating how deep. Nobody was debating whether. We argued then at the time it was occurring, this is a bear trap.
Mm-hmm.
And sure enough, it spun its wheels down there for about 4, 5, 6 weeks. And then boom. And by March, you're back to the highs. Okay. And nobody's cheering that. Everybody's still focused on things like NVIDIA.
Yeah.
Like, as if, artificial intelligence as a concept is something new. It's not. It's been around for years. It's only now become popular.
Mm-hmm.
That's a bubble market, in our view. It's a mini bubble within tech. And it's not an overall tech bubble, because overall tech is not doing what NVIDIA or even Microsoft is doing. So people are focused on these few narrow leaders, and they're not focused on the broad financial sector, which in our opinion is technically ripe to do just about what banks did in March. I'm not talking about banks now. We're talking about things in the financial sector that are non-banks. Retail is basically laying just above the 2022 lows, just like financials.
Yeah.
Healthcare sector, second biggest sector in the S&P, has been the steadiest sector out there, therefore has attracted a lot of money because it's safer.
Mm-hmm.
It looks like a pending disaster based upon our technical work, and it's very close to our trigger numbers. These events can't be happening and the market go up.
Mm-hmm.
These are two big areas of focus in the stock market. So NVIDIA is a teaser off to the side.
Yeah.
Meanwhile, these big sectors are, they're literally loitering. It'd be as if the S&P right now were trading about 3,800, a couple hundred above its 2022 low, and laboring.
Yeah.
That's what these sectors are doing. When they go, market goes. When the market goes, the data points go. The Fed starts to panic.
In one of his recent Twitter threads, Michael again explains the importance of holding on to your stack regardless of current market conditions. The tweets read, "Back in 2011, everyone was calling for $10,000 gold. It didn't fit our technical outlook. Now it seems everyone is bearish despite one of the best technical and fundamental setups for gold and silver in many years. Yes, there are a handful of bulls, but mostly I see bearishness. Any asset has periods of non-performance. There's probably some guy out there who bought tech stocks in 2000, held them, and didn't get back to breaking even until around 2015. There were people who probably loaded up on stocks in 1970 and made no money for over a decade, and then sold in 1982, just at valuation lows out of sheer frustration, despite that being the bottom for the next 40 years. Remember that nothing stays cheap forever or expensive forever." What are your thoughts on Michael Oliver's interview and tweets? Please drop your replies, as well as your personal assessment of the precious metals and stock market in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.